The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at what's been happening in these markets as of late, we are really ramping up planting season in many areas. We've, of course, had a lot of headline news that we have had to track in the markets across the board. Let's talk about how all of this is kind of playing together right now across the grains and in the livestock sector as well, and the overall ag economy. Joining us for a conversation, economist and professor at Iowa State University, Chad Hart, is with us here today. Chad, it is good to have you back on the program. Thanks for the time, and I hope all is well.
All is well. Glad to see you as well.
Well, it's good to see you too, and hear from you again. I know you've had a busy several months with various clinics and more around the state of Iowa, and obviously classes going on there in Ames and more. And as I kind of mentioned, planting season's here. I'm sure there's plenty of activity in and around central Iowa here right now, Chad.
Oh, yeah, there definitely is. In fact, that's one of the things that I've sort of, as I talk with my marketing class about, that we're entering that period of time now when we switch from just thinking about what's happening with demand to, hey, we're getting ready for the next year's supply here. We're looking at planting going on. And in fact, a lot of the questions I've been getting over the past couple of weeks have been, how quickly can we see planting get off the ground here, especially as we look at, north of 95 million acres of corn being planted across the country. And so it's looking at that, how quickly can we get in here? It looks like the Western Corn Belt and the Northern Corn Belt will go in a bit easier than what we're seeing in the South and East. But the idea is there's still this big expectation of, hey, especially here in early April, farmers have been chomping at the bit to get into the fields now. Now that we're able to do it, they're moving as quick as they possibly can.
Well, let's lean into this a little bit here and set aside the tariffs and the headline news risk and more for a little later in the conversation. We should touch on it, but really just looking at weather and how much, that really hasn't been at play in the markets, I feel like right now, and it's starting to finally get factored in again, I think. And then you look at planting and just all the supply demand fundamental aspects of these grain markets. This is kind of the seasonal time where we really should be looking at these things, right, Chad?
We definitely should. I mean, if you look at just in general, over the past 40 years, for example, what we tend to see at this time of year are strengthening prices. And it's because of the weather concerns we have as we get into planting and typically the delays that are created when we see either things are too wet or in some cases too dry to really be dropping that seed in the ground. And when you look at the situation we're in here in 2025 right now, you still got a lot of the country dealing with at least dry, if not drought conditions. At the same time, too, though, we look at places like Kentucky and Tennessee, and we've been seeing substantial rainfall over the past few weeks, creating some flooding issues. So we seem to be catching some of those extremes, and that does tend to lead to some price improvement usually as we work through April into May.
Well, and looking at these markets, one by one, let's start at the corn side where, Chad, that balance sheet's still fairly snug. And so right there in itself is a key piece, I think, of the supply demand aspects that we have to keep in mind as we start to try and get this corn crop in the ground.
It definitely is. And that was, if you want to think back to, the WASDE report coming out here earlier in April, is that it did cinch that up just a little bit more. And we're seeing that increased usage, especially through exports, which is the thing that's, under some scrutiny right now. But when you think about, those supplies are much smaller, or, those stocks are much smaller than we had expected just 6 months ago. You combine that with a little weather uncertainty as we go into planting this year's crop, and it does give some leverage to the bulls in the marketplace to say, you know what, maybe we need to let that corn price move up a bit here because there's still a lot of risk involved in creating enough corn to meet the usage needs that we have out there.
Well, on the soybean side, I know we've seen a bit of a futures rally here as of late, but still, you look at that corn soy price ratio, and you mentioned it earlier, the talk of 95 million some corn acres, maybe more, soybean acres taking a hit. I mean, still, it feels fundamentally that the soy complex still just feels kind of sluggish, kind of bearish. I mean, whatever term you want to use. So, you talk to me about what you're seeing on the soybean side, Chad.
Well, that's still in general, it has felt sluggish. I guess I'll put it that way. But as you mentioned, the past couple of weeks, we've seen more movement there than you might expect. And I think that is because there is a strong expectation that we will see fewer planted acres this year. And if you do have these weather issues going in, well, that could lead to smaller soybean crops in the future. And I think that's leading to a little more optimism, if you will, in that market over the past week or two. Now, a major challenge will come down the line as we look at, and we'll bring up tariffs later, but the idea is trade is still a big part of this. In fact, if you think back to the WASDE report again in April, what we saw was a little bit of an increase in soybean crush. But if you dug deeper into that report, it showed that crush expansion is mainly due to soybean oil exports as we look there. And soybean oil exports have been significantly rebounding, if you will, over the past year. We had watched those dwindle as we built up our biofuel supplies, especially through renewable diesel. Well, now those exports are back, and that's helping at least support the soybean market here in the short run.
We are having a conversation with Chad Hart from Iowa State University here today on the show. And Chad, one more thought for quart of beans here. I've noticed some intermarket spread action over the last several sessions. And this is also kind of seasonally that time where we're shifting away from the last, bit of old crop marketing and really putting a focus on new crop, right, Chad?
Yep, it definitely is the case here. If you think about, especially here in, let's call it Iowa, Illinois, Indiana, this is when the bins tend to start to, we start thinking about when do we need those cleaned out by? And so getting ready for that next year, that's not just planting the fields, but having, the storage facilities open and ready to take in that next crop when we get to fall.
What about the wheat markets? We should touch on some of the fundamentals there right now. Weather, I know, playing a role in the HRW wheat country right now and overseas too and more. But I mean, you just take a look at the wheat complex as a whole, Chad. What stands out to you right now?
Well, as you mentioned, the idea is that we do see some weather uncertainty building in there. And especially what I notice is, say, for example, you look at Chicago wheat and you're looking July in the 550 range, but D sitting out there that $6 range. So that tells me this is a market that, while it has been trying to figure out which way to run right now, you can see that it wants to go higher. I've described it as it's one big problem away from better pricing. And I think the market is, if you will, building that into those prices, especially as we look further out in the wheat complex.
Well, thinking about the overall grain market picture here, let's rope in the tariff conversation. I mean, it's the elephant in the room that we do have to talk about, and we know that that's going to be that headline risk factor that's going to, potentially move these markets, out of some of these seasonal patterns that we've been talking about. So I guess broad strokes here, when you look at the tariffs, we're in the 90-day pause, except for China, of course. We have that going on, and we have negotiations happening. I mean, this is a fluid situation. What is your view of tariffs and the impact on commodities, exports as a whole, Chad?
Well, that's you mentioned it's very fluid right now. And so if you think about the way the markets have reacted over the past few weeks, we saw the initial downturn when they were announced. We saw basically the recovery when the pause was announced as well. And so we're sort of back to where we were before the reciprocal tariffs were announced. But that also indicates that if they come back online in 90 days, the market will likely downshift at that time. And so I think as we're looking here right now, the challenge is going to be, not is the market going to react to the tariffs themselves, but it's going to react to, do we hear news of negotiations? Who are we negotiating with? Basically, who is sitting at that table first? And for us in agriculture, I'm going to argue We hope that it is places like Canada, Mexico, China, European Union, Japan, South Korea. And I'm going to point out places like Colombia as well. They haven't necessarily been high profile markets when you think overall trade, but when it comes to things like corn, Colombia is our third biggest market. And so we want them closer to the front of the line. So do we see those negotiations really pick up the pace given this 90-day pause?
I think what's been interesting here is of late as well. You look at daily flash sales, weekly export sales, especially the corn side. You know, the U.S. corn program has been fairly robust. We haven't seen a whole lot of cancellations out there. I know there have been a few, but you know, you look at exports, things have looked fairly well, and there's been some outlier countries that have stepped in there to buy some U.S. corn, for instance, things of that nature. So that's been a little perplexing to me here lately, just seeing the continued, things are looking good. But then I guess I should say, and I think about this too, seasonality, this is not a very big window for U.S. exports of grain, Chad, right?
It's not. I mean, typically we see things slow down at this time of year. But as you look at the momentum that's built up, corn export sales year over year are up around 25%. Soybean export sales are up around 13%. We're at record levels when it comes to soybean meal. Like I mentioned earlier, the recovery we've seen in soybean oil. So for the most part, when you're looking across the major commodities, we're seeing growth, and that growth has actually been building for quite some time. When I look at the corn market, for example, this isn't just a recent surge. This has been building in over the past 6 to 8 months. That shows that this trend in exports is not just a short-term phenomenon. It's been building for some time now. And like I say, we're seeing it across multiple products. And so for an industry that's looking for increased usage, this is great news. But yeah, the tariffs create some uncertainty around that. What I've been seeing and watching is that we've continued to make sales, and I think that's because the tariffs have been paused and business is still going on as usual. The big question will be, what's that policy framework look like? What do those tariffs look like once we get back to harvest and we really start to ramp up that export need again?
Well, since we're on the topic of tariffs, I want to segue over to the livestock sector and get your perspective on impacts to cattle, hogs, beef and pork demand and more. And I mean, here recently, this cattle market, after taking some body blows, I think, and moving with the stock market, has started to rebound a bit on the future side, things of that nature. But from your perspective, how are tariffs impacting the overall protein sector right now, Chad?
Well, tariffs are hurting there. And I'm going to argue they're probably hurting more on the livestock side than they are on the crop side right now. When you think about that demand for protein around the globe, it tends to be more evenly distributed, if you will, than what we see for the grains. Most of our grain movement is in the fall of the year, but meat, it's a year-round market. And we've seen declines on both the beef and pork side. In fact, pork has been fairly dramatic in the downshift we have seen just within the past couple of months. And so I think you are seeing those tariff concerns manifesting themselves into lower sales when it comes to the hog industry.
Well, and I wonder, moving forward here, if we do see these tariffs go into effect, does it put a cap on a hog market that's been trying to stabilize a bit, or cattle that are starting to move back up to some high levels? I mean, is that something that puts a pretty lofty ceiling over top of these markets, Chad?
Well, it can, mainly because if you think about it, if the tariffs truly do reduce those sales, well, that's meat that's backing up onto the U.S. market, and that's going to drive down prices here as well at a time when the industry is needing the strong prices that they have in order to cover cost. If we look at whether we're looking beef or pork, the idea is right now, yeah, prices are high for the most part, but costs are high as well. And therefore, farmers and ranchers are needing to capture as many dollars as they can per pound.
Well, as we near the end of our segment here, let's get some final thoughts. And I always like to ask you just some risk management thoughts here for producers as we navigate some of these seasonal fundamentals, plus all the headline news risk that's out there and more. And we know that, there's that risk out there when you're trading futures and options, and everyone's situation is different. But if you could give some general thought recommendations on risk management, what would you say?
Well, in this case, I'm going to argue that this would be risk management that I tell you whether we were in this tariff fight or not. The pause, the 90-day window offers up this opportunity that, when we look at the seasonal pricing pattern that we tend to see on the crop side, April, May, June tend to be our strongest prices. Hopefully we'll continue to build into that. That'll give us an opportunity to protect ourselves against possible tariff moves deeper into the year. And so it's, like I say, it's a normal window. We should be looking to take advantage of that weather premium that builds in. It's just that now we have two reasons to look for that opportunity. So I like to tell farmers, I recognize that they're getting out in the fields right now. They're planting. They're not thinking about marketing that much. They're thinking about production right now. But I would say go ahead and make some aspirational offers. Put some potential sales on the books out there to say, hey, I'm not watching the markets every day, but if I put in an offer that's meaningful to me, I'll be happy I made that sale down the line.
Any other final thoughts? Anything else you're watching in these markets, Chad, that you would share or reiterate with folks today?
Well, I think the other big thing here is, as we said, with the tariffs, things will continue to be fluid as long as we don't have certainty upon them. But that fluidity works both for us and against us, just as we've watched over the past couple of weeks. When the tariffs were announced, prices went down. But when the tariffs were paused, the prices recovered very quickly again. And so hopefully we can use some of that volatility to our advantage this time.
Well, always appreciate the conversation. Chad Hart, Iowa State University. Thanks for being with us. I wish you and yours a happy Easter weekend, and we'll look forward to catching up with you again real soon. For now, though, we'll let you go. Thanks for the time, Chad.
Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.